Good morning. Welcome to the investment meeting of the Teachers Retirement Board for February 2nd, 2023. I'm going to take the roll. Brian Bergen,
Brian Berge, representing Mayor Eric Adams, present.
Thomas Brown, Russell Buckley,
On behalf of Panel for Education Policy Chair, Dr. Angela Green, and Chief Financial Officer, Sarita Scott, and I am present.
thank you. Allison Hirsch,
Present on behalf of Controller Berglander.
David Kazansky,
Present.
Victoria Lee.
Good morning, President.
We have a quorum. So the first order of business is to nominate a temporary chair for the meeting. Do I have any motions?
I'd like to nominate David Kazansky.
Do I have a second?
Second.
All those in favor say aye.
Aye.
All those opposed say nay. Any abstentions? Okay, Mr.
Let
Chair.
it go to your.
Okay, so I'm going to turn the meeting over to you.
Thank you. First of all, I would like to welcome our newest trustee, Victoria Lee.
Thank you.
Welcome aboard. All right, so we'll start our public agenda with a review of the passport fund performance. Melgaton will start off with December 2022.
Right. Have it on the screen. So the passport funds in the month of December, after a strong start to the fourth quarter, were negative for the month, really across the set of funds. In terms of the US, one of the biggest impacts to the markets was the Fed activity. They did come out and raise rates in December, 50 basis points as expected, but they also did signal an increase to their target peak rate in 2023. And as a result, we saw both yields increasing and also equity selling off. So we did see still negative results for the international equity options as well, although only slightly negative. So better performance from non-US markets. In terms of the month of December, the best performing fund was the International Equity Fund. And the worst performing fund was the Sustainable Equity Fund, which is down about 5.9% for the month of December. Really based on that fund's growth orientation, which you can see looking across the page here was a drag for the year 2022 as growth was really more out of favor. For the quarter, you can see 3 months we were in positive territory across the board, really based on strong results from the months of October and November. And negative results on an absolute basis for the full year calendar 2022. For looking back at the year, the Sustainable Equity Fund was the hardest hit fund, down about 31%. And the Balanced Fund, the most conservative fund in your program, was down about 10% for the year. Any questions on December results? If not, we can flip to January estimates.
No questions. We'll move on.
Thank you. So for the month of January, we actually saw some strong financial market results across all major asset classes, led in part by optimism around China reopening, and also a bit of moderation in sort of inflationary sentiments across the country, across the US. For the month of January, the global market composite benchmark was up by 7.14% and roughly 10% fiscal year to date. The diversified equity fund hybrid benchmark was up by 7.18% for the month and also up by 10.2% for the fiscal year to date as well. Across to balanced fund benchmark, we saw positive results as well, up 3.05% for the month and 3.38% fiscal year to date. Across to international, we saw some strong performances on the international composite benchmark, up almost 8% for the month and almost 12% fiscal year to date. Both the sustainable equity funds benchmark were up for the month and for the fiscal year to date as well. We saw 9.7, almost 9.75% positive results from the Brown Advisory Sustainable Fund for the month, and also up 7.17% fiscal year to date. Down to the US equity index fund, almost 7% across both mutual funds for the Fidelity Total Market Index Fund and the Dow Jones US Total Stock Market Index. Again, positive results for the International Equity Index Fund benchmark and mutual fund as well. 8.45% on the Fidelity Total International Index Fund and the MSCI Equity ex-US almost 8% as well for the month. So all in all, positive results. But we do also want to caution as well that we do, as a whole, we kind of do see, we are cautious of the slowing growth in the US and also sort of a cautionary tale around the shallow recession as well that may occur, may not occur. So optimism, yes, but also general caution going into the year. Thank you.
Thanks. Any questions on the January numbers? Great, thank you very much. Next, we'll head over to the public agenda for the pension fund. Who from Pam will be presenting on that?
I don't think we have anything on the
Do we have
public
any?
agenda.
Okay, great. All right, good. All right, with those public agenda items taken care of, I'd like to present a motion. I'd like to entertain a motion to move to executive session. Do I have a motion? A second. Any questions, concerns to me? All those in favor? Aye. Any opposed? Extensions? No? Good. All right, great. Then we will move to an executive session. We are good. Well, let's go back into public session. Motion. We are now back in public session. Ron, can you provide the readout?
Sure. In executive session, we received a preliminary performance data on the pension fund. There was a presentation on an investment policy issue. Further presentation and discussion was laid over. We received 2 infrastructure presentations. Consensus was reached on both. We received a presentation in the private equity asset class. Consensus was reached. We received a presentation in the alternative credit asset class. Consensus was reached. We received implementation plans for 2 asset classes. Consensus was reached on both. And we laid over an issue within the private equity asset class.
Great, thank you very much. Unless there's anything else that anyone would like to bring up before we close this out, I will then call for a motion to adjourn. Do I have a motion? Do I have a second?
Second.
All those in favor? Aye. We are adjourned. Thank you all so much. Thank you.